The economy is down, people are losing their jobs, and uncertainty is at an all-time high. It seems like the worst time to think about getting rich, but what if I told you there's a way to thrive during the recession? Sit tight, because I'm about to unlock the secrets of recession-proof wealth. Get ready to join the ranks of those who turn crises into opportunities. Let's dive in. From the title of this video, you're probably thinking, is that even possible? Here's the thing. A recession can be challenging for many people, but it can also present unique opportunities for those who are prepared.
But Herb Stein one time said, anything that can't go on forever will end. Now that seems pretty, but think about that. And particularly think about it next time you're trying to do something just because the stock's gone up a whole lot, and your neighbor's made money or something. You've got to be, you just have to sit and think objectively.
For example, during a recession, stocks and real estate prices often drop, making them more affordable for investors. Also, when job competition is high, those with valuable skills and experience may command higher salaries. In fact, history has shown that many successful businesses and investments were started during a recession. Companies such as Microsoft, General Electric, and IBM were founded during economic hardship and have become some of the most successful companies in the world. As dark as recession periods seem, it's not all doom and gloom. Some people turn these seeming woes into moneymakers, and with the right mindset and strategy, you can take advantage of the opportunities that a recession presents and come out on top. Yes, you can make a fortune during the recession if you know how to play your cards right. Think I'm bluffing? Keep watching. What I'm about to show you is nothing but facts. I want to show you that despite how gloomy the situation seems, you can use it to skyrocket your finances. Let's see how. How Warren Buffett uses recession to increase his wealth. In times of economic turmoil and uncertainty, the shrewdest and most patient investors often come out on top. And one investor who's proved this time and again is none other than the esteemed Warren Buffett. Buffett has built his fortune through intelligent investing, savvy business decisions, and a deep understanding of the markets. One of his greatest strengths is his ability to spot opportunities during economic hardships. But how exactly does an investor like Buffett make money during a recession? The answer lies in a few key factors. Firstly, recessions often lead to a drop in stock prices. It creates a buying opportunity for long-term investors willing to wait out the downturn and take advantage of undervalued assets. For example, Buffett invested heavily in the banking sector during the 2008 financial crisis when bank stocks were at an all-time low. His investments paid off handsomely in the following years as the market rebounded. Secondly, recessions create a sense of panic among investors, leading them to sell their stocks in a flurry of activity. Warren Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful."
Pension funds in 1970 put 100 and some % of their new money in stock because they were wild about stocks. Then they got a lot cheaper, and they put a record low in, 9% of their net new money in 1978 when stocks were way cheaper. People behave very peculiarly in terms of the reactions because they're human beings, and they get excited when others get excited, they get greedy when others get greedy, they get fearful when others get fearful, and they'll continue to do so. And you will see things you won't believe in your lifetime and securities markets.
He means that when the stock market is booming, most people are eager to invest and prices are high. But during a recession, many investors panic and sell their stocks, causing prices to plummet. During this time, Buffett sees opportunities to invest in quality companies at a discounted price. Thirdly, recessions often create opportunities for value investing, which is Buffett's secret weapon. He looks for quality companies with a strong competitive edge. In this approach, investors look for market undervalued stocks with solid fundamentals like a healthy balance sheet, reliable cash flow, and competitive advantage. Value investors can make substantial returns in the long run by finding these hidden gems. So if you're worried about the current recession and wondering how to make the most of your investments, take a page out of Warren Buffett's playbook. How? We will discuss that in 1 second. But first, please subscribe to the channel because I will be giving more valuable videos like this. Please give this video a thumbs up and share it with others who need this value-packed video. Now back to the topic of the video. How to grow your wealth in a recession. The current economic climate makes it easy to feel discouraged about your financial future. But there are strategies you can use to weather the storm and come out on top. So let's dive deeper and explore how you can get rich during a recession. Step 1. Identify opportunities. The first step to getting rich during a recession is to identify opportunities. Even though the economy is struggling, some sectors are still thriving. For example, industries like healthcare, technology, and e-commerce have grown significantly during the pandemic. Some people join a startup at the right time, and it does so well that they never have to worry about money again. Thanks to the lockdown, we saw a massive spike in the growth of e-commerce. Some people invested in e-commerce businesses or dispatch companies. Some went ahead to create their own dispatch companies. So, take a look at the current trends and identify sectors that are experiencing growth.
Banking could get in a lot of trouble just because of the kind of things that they did, and that I didn't like the banking business as well as I did before.
Step 2. Invest in quality companies. The stock market tends to take a hit during a recession, but quality companies with solid fundamentals are more likely to weather the storm. Buffett likes to look out for companies with a strong competitive advantage that are undervalued by the market during the recession. So look for companies with solid fundamentals that can weather the recession and invest in them. Do your due diligence and ensure that the companies have a track record of surviving tough economic times and are likely to come out stronger on the other side. Step 3. Avoid high-risk investment. While it's a good idea to take advantage of opportunities during a recession, it's best to be smart about it. Making money, especially during a recession, involves taking risks, but well thought out and smart risks. The recession provides so many opportunities to invest in growing your wealth. It may be tempting to try to make a quick profit during the recession, but it is necessary to avoid high-risk investments that could result in major losses. You'd be better off avoiding investments in companies with unclear fundamentals or high debt levels. That's usually a telltale sign that the company barely hangs on in the recession. Also, it's not a good idea to do things based on emotion or hype. The last thing you want to do is follow the bandwagon. That's how you end up making rash decisions that may end up costing you a lot. Once, I almost fell prey to a Ponzi scheme because I knew many people who were into it. You all know what happens. It goes well for a while before it crashes and burns. Some, unfortunately, invest lots of money and they're left with nothing. So be careful with investments that seem too good to be true because in most cases, they are.
Investors behave in very human ways, which is they get very excited during bull markets and they look in the rearview mirror and they say, I made money last year, I'm going to make more money this year, so this time I'll borrow, or the neighbor says, I wasn't in last year when that neighbor was dumber than I made a lot of money, so I'm going to go in this year. So they're always looking in the rearview mirror. And when they look in the rearview mirror and they see a lot of money having been made in the last few years, they plow in and they just push and push and push on prices.
Step 4. Invest in defensive stocks. One underrated way to grow your wealth during a recession is by investing in defensive stocks. So what are defensive stocks? Defensive stocks are companies that tend to do well during a recession because they provide goods and services that people need. These companies do well regardless of the economic climate. Some examples are food and healthcare. Food and healthcare never go out of need. Whether the economic climate is good or not, people always need food and access to healthcare. The COVID-19 pandemic is a good example. Multiple industries closed. Offices shut down. Restaurants were also shut down, but people still had food delivered to their homes. So, find evergreen companies that don't readily flake during economic hardship. It can provide some measure of stability and help protect your portfolios from major losses. Do bear in mind that defensive stocks may not provide the same level of growth as more aggressive stocks during a bull market, but they can be a valuable addition to your portfolio during the recession. Also, it helps diversify your portfolio, which is always welcome. Step 5. Create multiple sources of income. The last thing you want to do is rely on one source of income during a recession. What if something happens to your job? You never want to be at the mercy of an employer who could decide to do away with you when things get tough for the company. Look for other ways to earn income. There's freelancing, creating courses, offering services, or starting a YouTube channel. Just do well to ensure that your source of livelihood isn't tied to one source. Step 6. Invest in undervalued companies. Buffett once said, "Whether we're talking about socks or stocks, I like buying quality merchandise when it is marked down." He's talking about investing in companies or other investments that have plunged due to the recession. Taking a page from Buffett's book, look for undervalued or distressed assets such as companies, properties, or other investments that are temporarily impacted by the recession but are likely to recover. Don't be afraid to buy when others are selling. People tend to panic and sell their stocks when the market is down. It can create buying opportunities for those brave enough to take them. For example, Buffett invested in Bank of America during the 2008 recession when others were selling, and that investment paid off in the long run. Step 7. Re-strategize. Now would be a good time to revisit your financial goals. Check out your achievements so far and remember to pat yourself on the back. Never hesitate to commend yourself in anything you do. You're working hard and deserve praise. If no one will do it, then do it. Make a plan to prioritize saving and investing long-term to benefit from the market's potential future rebound. Step 8. Be patient. The most important lesson we can learn from Warren Buffett is patience. His strategy isn't about making quick profits, but intelligent investments that pay off in the long run. Buffett's investments in companies like Coca-Cola, Johnson & Johnson, and Wells Fargo have paid off over time, and his patience and discipline have been vital to his success.
Generally speaking, it pays to stay away from declining businesses.
Selling off your investments and cutting your losses at the slightest hint of turbulence may be tempting. However, see the recession as an opportunity to invest in quality companies at a discounted price. Economic downturns are temporary, and the economy will eventually recover. By staying calm and sticking to your investment strategy, you can use the recession as a stepping stone to greater wealth and financial security. The 2023 recession seems daunting, but it can be an opportunity to upscale your finances with the right mindset and strategies. Even some of the greatest economists have stated that a recession is an inevitable part of the larger economic cycle that occurs every several years. History has shown us that the economy is cyclical. There will be times of growth and times of recession. What's important is that we prepare ourselves to weather the storms that come our way. However, it is essential to remember that there is no right way to capitalize on the next recession. Success will ultimately depend on your unique skills, knowledge, and risk tolerance. With careful planning and the courage to take calculated risks, you can weather the storm of the recession and come out on top. So get ready. It may just be your chance to finally achieve the financial success you've been working towards. That brings us to the end of this video. I hope you found this video insightful. And if you did, give it a thumbs up so I know you had as much fun as I did making this video. I'm always on the quest to upscale my finances, and if you want that as well, I suggest you watch this video here. See you there.